Hi, this is Veronica Jackson and welcome to today's Tax and Business Matters. Today let's find out how to know if you've received all your tax forms. January is not your mail carrier's favorite time of the year. U.S. Postal Service delivery bags are overloaded right now with statements from employers, banks, stockbrokers and other institutions and agencies that were involved in taxpayers' financial lives last year. Each of these groups has, by law, until January 31st. Or the next business day when the date falls on a holiday or a weekend, to get their annual tax statements in the mail to taxpayers. The one bit of relief for postal workers is that many taxpayers now receive these documents electronically. So be sure to double-check your email, not just the curbside one for these statements that should be on their way. Most taxpayers depend on the same basic data to file returns. If you work for someone else, the IRS expects you, and the agency, to get a statement detailing that income. The data are slightly different, depending on whether you get paid a salary or do contract work, but there's a form for either case. So here are the common income deduction statements. W-2, this is the key form, and you need one from each employer you worked for during the past year. Your W-2 shows how much money you made, how much income tax was withheld, Social Security and Medicare taxes paid, and any benefit contributions, which are retirement plans, medical accounts and child care reimbursement plans. 1098, for most homeowners, mortgage interest is tax deductible, and this document will tell you how much you paid last year. Your lender is required to send you one of these forms if you paid at least $600 interest. Actually, your mortgage company probably won't send you an official Internal Revenue Service form, but a document of its own design that contains the same data. In addition to the mortgage interest, other information often found on this statement includes amounts paid toward points to get the loan and escrow disbursements for real estate taxes, also deductible on property insurance. 1098E, are you paying back a student loan? The interest on your educational debt is reported on this form. Your lender must send you one if the interest tally is at least $600. You may be able to deduct your student loan interest and possibly other loan-related amounts, such as origination fees and capitalized interest. To figure the deductible portion of the interest amount found here, use the worksheet in your Form 1040 or Form 1040 instructions. 1099, INT, if you earned more than $10 in interest on a bank account or a certificate of deposit, you'll get one of these forms for each account. Don't dismiss this statement if you reinvested the interest. Tax law says you received the income even if you didn't actually have it in your hand, and reinvested earnings are still taxable income. 1099, IMT statements also are issued to people who cashed in savings bonds. 1099 DIV, earnings from individual stocks and mutual funds are reported on Form 1099 DIV. This will show dividends and capital gains distributed over $10. As with reinvested interest, if you use the dividends or distributions to buy additional shares of the stock or mutual fund, you still have to pay taxes. However, the distributions and certain qualified dividends are taxed at the lower capital gains rates. 1099B, if you sold stocks, bonds or mutual funds, you will receive a 1099B from your broker or mutual fund company. This will tell you the number of shares sold, when they sold and the amount you got for the sale. You'll need this information, along with the date you bought the shares and the amount you paid for them, to figure your taxes. 1099G, taxpayers who got a refund of state or local taxes last year will get this form. If you use those taxes as a deduction on your previous year's federal income tax return, you'll need to report the 1099G amount on this year's return. You don't have to worry about reporting this refund as income, however, if you took the standard federal deduction instead of itemizing. 1099R, if you received a pension or distribution from an individual retirement account or retirement plan. The 1099R provides the details of these transactions. The form is issued by your broker, pension plan manager or mutual fund company. You'll also get a 1099R if you rolled over money in the retirement plan, usually a 401k, to an IRA, or if you converted a traditional IRA to a Roth IRA. A rollover usually is not a taxable event, but a pension payout may be. 1099 MISC, Self-employed individuals who earn $600 or more should get a 1099 MISC from the employer. You should get a separate 1099 MISC for each independent job you had during the previous tax year. That's all we have for now on today's Tax and Business Matters. You can check on more IRS tax tips on our website, www.howtodouryourowntaxes.com. Please join me again next time as we continue the last half, that is about the late arriving forms. This is Veronica Jackson saying goodbye, and have a nice day.